Hi there. So in this video, what I'm going to do is I'm going to help you to hopefully understand the basics of options trading and understanding calls and puts. Because I think when a lot of people want to understand options trading, get into it so they can essentially make some money, whether it's part-time or full-time, options trading can be immensely confusing. I mean, I'm by no means an expert options trader. I've only really got into it this year. My main thing is crypto, but I've gone into options trading because the crypto market is basically in the dust. So I thought options trading was a really good way to make some, extra money, because, you can make money with options in multiple ways, whether the market goes up or goes down. So that's why a lot of people really enjoy options trading. But I'll be honest, it's taken me a while to really wrap my head around it. And I'm guessing if you're watching this video, you're going to be in the same boat as well. But the thing is, options doesn't have to be confusing once you understand the basics, and once it starts to, things start, clicking into place, you can really see the power of how you can make, nice money with options trading. Now, if you've never traded options in your life and you think you're going to become a millionaire, I don't want to disappoint you. That isn't going to be the case. I think when you start out options trading, I think there's going to be a real learning curve. It's going to take probably a couple of months, maybe 6 months or more, to really wrap your head around. It can happen quicker. Obviously, it can happen slower. So I think when you're starting out, I think really the key is to place a few trades, see if you can, get them profitable. And then really it's going to take about 6 months or so to kick in. And I think realistic income goal is really to make an extra $500 to maybe $1,000 a month. Obviously, when you become experienced, you build up a nice nest egg through your profits for options trading. Obviously, you can make more money, but I think really in the beginning, you want to start small and grow, just like if you were starting a business. So that's kind of like my thing about options trading, and I really hope after you've watched this video you can really understand what options trading about and understand the basics of calls and puts, which is really the essence of what options trading is all about. So as you see in front of me, I've got my trusty slide here, really high tech, but I don't care. I just want to help you guys hopefully understand options trading. So with that said, let's go through these slides and get you up to speed with options. So what is an option? So an option is a contract between two parties for the purchase of or sale of an asset, which is the stock at a specific price by a specific date. So you've basically, the normal way you would buy a stock is probably by going to your broker or your online app, pick a stock, buy it directly, and basically the profit you make is if the stock goes up, but if it goes down, you lose money. An option, whilst you kind of are sort of buying a stock, you're not, because with an option, basically it's just a contract between two parties, yourself and either the option buyer or seller. And the thing is, when you buy an option, whether it's to buy a stock or sell stock, you don't actually have the obligation to buy or sell that stock. It's a contract. You only exercise it when you are in the money, and basically you can execute that option for a profit. So whilst you are sort of technically buying and selling stocks or taking hold of them, you're not, because it's just a contract that gives you the right to buy or sell a stock. So hopefully that helps. But let's go into sort of a little example here. So I've got a little example that will hopefully help you. So basically we got Simon, who's the option buyer, and you got Chloe, who's the option seller, and the stock that's being traded is StockX. So let's say that on December 1st, StockX is trading for $50 a share, and Simon and Chloe make the following agreement. Simon can buy 100 shares of StockX from Chloe for $100 per share at any time before December 30th. So regardless of what StockX is trading on the stock market. If Simon wants, he can buy 100 shares from Chloe at $100 per share. In order for Simon to have this right, and as the obligation that Chloe is taking on, Simon pays Chloe $15 for that right. So that is basically how an option works. It's basically a contract between two parties, the buyer, the option buyer, which is Simon, the option seller, which is Chloe, and both are hedging their bets that the StockX will either go up or it will go down. And Simon makes money when StockX goes above the strike price, and Chloe makes money if the stock goes down because she's collected Simon's premium. So basically, these are essentially the four sort of elements of an options contract. You've got the underlying asset, StockX, that's being traded. The strike price is $100. And just to remind you, the strike price is the price of the stock that if Simon chooses to, he can buy that price for buy that stock at $100 for the duration of a contract, which has an expiry date of December 30th. Now, basically, Simon had to buy this contract, and for the benefit and the right of selling StockX for $100 at any time between December 30th, he's got to pay Chloe a premium of $15 to basically buy that options contract. And another thing to note as well, when you buy an options contract, you're not just buying one share, you are buying 100 shares. So when you go into a trading app or on a desktop sort of website where you start trading options, basically you will see the price of a premium, and the premium price could be any price, but the price you see on the in the app where you can buy an option and execute it, that premium is only for one share. Basically, when you buy that options contract, you're buying 100 shares. So let's make it simple. So say if you see an options stock you want to trade with an option, you buy it, and the premium's $1, you're going to be paying for 100 shares. So you're going to be paying $100 in order to exercise that option and buy that option in order to have the right to basically buy those shares at the strike price. So just bear that in mind. So let's keep going. So how does an options contract work? So let's just sort of run through this example and break everything down. So Simon is the option buyer and Chloe is the option seller. So in exchange for $15, which is the premium, Simon now has the right to buy StockX for $100 per share anytime before September 30th. So Simon, the option buyer, pays the $15 premium to Chloe, and now he has the right to buy StockX from Chloe $100 per share anytime before December 30th. Now, Chloe, the option seller, seeing she's selling something, she collects the $15 premium from Simon, but if obviously Simon, the option buyer, decides to execute his option to buy the shares for $100, basically Chloe then has the obligation to sell StockX to Simon for $100 per share. So in this example, Simon will execute his option if the StockX is above $100 per share, because that is going to be his profit. And obviously, if StockX drops below $100, Simon won't make any money, and he'll just basically let the options contract expire worthless after December 30th, and the only money he'll lose is his $15 premium. Now, obviously, if Simon, if Simon doesn't execute the contract, Chloe walks away with a profitable deal with $15. But obviously, if Simon does execute that contract, Chloe has the obligation to sell stock X to Simon. So basically she's going to be, paying Simon $100 minus the premium paid. So Chloe technically has a loss of $85 if Simon were to exercise that option. So hopefully that is clear to you of the basics of how an option works. So let's just sort of go over the different types of options. So a call option gives the options buyer the right but not the obligation to buy a stock at a specific price by a specific date. Put options gives the option buyer the right but not the obligation to sell a stock at a specific price by a specific date. So let's just sort of look at this little grid and look at the difference between call and put options. So basically you only really have two, you can only do two things with, an option. You can either buy it or sell it, but you can trade. You've got 4 different trades that you can make. So you can buy a call option, and when you buy a call option, it gives you the right to buy the stock at the strike price. But in order for that right, you have to pay the option seller a premium. With a put option, or when you buy a put option, you have the right to sell the stock in the contract at the strike price, but for that right, you pay the premium. Now, when you sell a call option, you have the obligation to sell that stock in the option if the option buyer exercises. But in order for that benefit, of selling the option, you collect a premium, which is the profit, as long as the buyer doesn't execute your obligation to sell the stock. And then obviously you can sell a put option, which gives you the obligation to buy if the option if the option is exercised. But in order for selling a put, you collect the premium and make instant money. So how do you actually make money with these options example? So when would you take any of these sort of different 4 trades out? So if you think the market will go up, so what I mean by market, if you think a stock will go up, you're looking at within a specific time period, then you would buy a call option, and you choose a strike price for that stock that you believe that stock will go above, so you can make a profit if you execute. You buy a put option if you're bearish and you think the market will go down or a stock will go down. And obviously you'd make money if the strike price or of the stock in the options contract is above the price of the stock. Now you'd sell a call option if you're bearish and you think the market will go down, and basically you make money with the premium you collect from the person who buys the option from you. But you'd obviously sell a put option if you're bullish and you think the market will go up, and you'd make instant money and hopefully a profit with the premium you collect from the put option buyer. So basically these are 4 trades you can do basically with options. You can buy a call on a put, but you can also sell a call on a put, all depending on what you think a stock's going to do at any given time. So let's just recap. How do you make sort of money with options? The key takeaway to remember, regardless of whether it is a call or put option, is an options buyer pays the premium and an option seller collects the premium. So just like in the real world, when you buy something, you pay for it, and when you sell something, you collect money from it. That's the key of really options trading. So let's just wrap all this up for you. So basically, when you buy a call option, you make money when the stock price of the option is higher than the strike price in the option contract. This is your profit margin. When you buy a put option, you make money if the strike price of your option is higher than the stop price. This is your profit. When you sell a call option, your profit is the premium you collected paid by the option buyer, assuming they don't exercise the option to buy at the strike price. When you sell a put option, your profit is a premium you collected by the option buyer, assuming they don't exercise the option to sell at the strike price. And in a nutshell, that is the basics of call and put options. So I really hope this little video has helped you. I've tried to keep this video short as possible because I don't want to give you information overload, because I can understand that this can be incredibly confusing when you want to get into options trading. But my advice is watch this video a couple of times, and it will slowly sink in of how options work. But all right, so say you've watched this video and you think, great, what's next? What's the next step? Well, basically, once you understand the basics of options trading, you really need a strategy, and you need to start finding stocks that you can start trading. But obviously, if you don't know what you're doing, it can be incredibly, difficult, because if you don't know what you're doing, that is really, the sort of place where you can make mistakes and potentially lose money, or a lot of money, if you just start, gambling. So if you don't want options trading to be gambling, you need a strategy. And I can highly recommend a strategy called the one ticker retirement plan. And now this sort of strategy has been created by one of the world's leading options experts, Larry Benedict. Now basically Larry Benedict, all he does is he uses options in the way that I've shown you to trade one stock time and time again using call and put options. And basically with his strategy is all about having indicators to identify a stock of when it's going to move, so you can either take a call option out or a put option and start trading it. But in order for you to make money, you need the strategy, and I highly recommend that you start learning the one ticker retirement plan. And what Larry's done is he's recorded an interview where he goes through his one ticker retirement plan. If you want to watch this, just click this button, enter your email. It's completely free to watch the interview. Enter your email and you can start watching Larry's interview. And you can also get a free download of an options trading PDF, which just basically gives you a basic overview of what options are and the terminology. So if you want to learn the one ticker retirement plan and sort of get a strategy, you can start options trading. Click this button, enter your email for free, and basically, watch Larry's interview. It'll be on the following page, so you can start watching it right away. What I'm also going to do is I'm going to link to my favorite options trading resources below. And what I mean by options trading resources, I mean financial advisories that I use, because at the end of the day, when you're starting out options trading, you really need someone to give you solid picks that they've researched, that when you trade them, you've got the best chance to make a profit. It's the only way. You must follow an expert when you're starting options trading. And I'm going to link to One Ticker Trader below, which is actually by Larry Benedict. And I'm going to link to Jeff Clark Trader as well. Both are awesome financial advisories. And both of these experts, Larry Benedict and Jeff Clark Trader, or Jeff Clark, they give out options trading buy and sell alerts, so you can start trading options with calls and puts. These options trading resources are completely affordable, and you can just get started with them for just $19 and give them a try. So I'll link to those down below, and you can check them out if you want to. So I really hope you found this video useful and informative. If you like the video, please click like. Why not share it with your friends who you think might be interested in options trading, and why not subscribe for more content like this? Because I'm going to have a lot more content like this about options trading, but also about crypto as well, because I'm very passionate about crypto. So hopefully you found the video useful and informative, and I'll speak to you soon.